Well, good morning, everyone. Today is Tuesday. It's January 21st, and again, we have a fragmented week. What do I always tell you guys? Whenever we have a week that cuts off a day, either Friday or Monday, or we have a little mid-week holiday, it always breaks the week up, and we see lower than expected volume. For some reason, whenever we have a day off, funds decide that they should take the whole week off, but many times you will see this. And I've remembered this ever since I was a broker about 22 years ago. It's been a long time. But whenever you have a fragmented week, it'll be a dead week, or it may start up again on Thursday or Friday if like Monday's a day off. But don't expect a lot of volume. This week may be different because we're in full-blown earnings mode. So we may have a little more volume, but let's take a look at this week's agenda. Let's see what we got on the plate this week. This is last week's. Let's look at this week's. All right. Here we had Martin Luther King Day yesterday. Markets were closed. Not a lot of information here. We got existing home sales this week. The big report's going to be jobless claims. As you know, jobless claims has been extremely positive. The numbers have been just rocking and rolling. I think unemployment's right now at a 55 or a 60-year low. But anything between 200 and 220,000, the average is 216. Really nothing to be complaining about. The numbers are really solid. But I do want to talk about earnings. Now, I'm going to look at my other screen here because I have a lot of information. So if I'm not looking directly at you, I apologize. We've had 44 S&P members come out so far. The numbers have been down. And remember, this is about 9%. There's a total of 500 stocks. This is only 44. It's a taste of what's to come, but it's not, things could change. That's all I'm trying to say at this point. So far, earnings are down EPS, earnings per share down 3.8% from the same period a year ago, and revenue is 3.9% higher, all right? Which is what's been expected, much more or less what's been expected as of the past month. If you were to look at the expectations 2 months ago for the fourth quarter, which is the quarter we're in right now, you would see that the EPS was not negative. It was flat. And little by little, it's been going lower and lower. And now it's about 3.7, 3.8, which is exactly where the numbers are. So while the numbers are more or less in line with estimates, they're not great numbers. But with that said, 75% have been beating the EPS, and that's because the EPS has been moving lower. But 75% have been beating the EPS, and 70.5 have been beating revenue. And revenue has not been revised that much since the original estimate. So we're seeing some good revenue, which is really impressive. Earnings per share could be a little better. Revenue is solid. So far, the banking sector has reported a few of the large caps. We had JP Morgan, Bank of America, Goldman Sachs. The numbers have been a little better than expected, especially in light of low interest rates, all right? So the numbers have not been that bad. They've been in line. So today, after the close, we're moving on. We still have some bank stocks, but we're moving on. We've got Netflix, all right? So let me give you the expectations. Netflix reports after the close. The stock is down pre-open about 17 cents, very little. It's been moving slightly higher. It looks like it's an ascending triangle. Now, here's what you need to know about Netflix, all right? It beats earnings per share over the last several years about 75% of the time, and it beats revenue 50% of the time. So we've got that coming into today's number, all right? Revenue is expected to be up 30%. Nothing to laugh at. $5.54 billion, up 30%, and revenue at 52 cents per share. Sorry, I keep looking away. I've got all this data here. So I want to make sure I represent it correctly to you. So that's Netflix, all right? So Netflix is looking to do substantially better on the revenue and okay on EPS. Again, these are not bad numbers. If it can beat estimates, and it beats estimates on the EPS about 75% of the time, earnings 50% of the time, it's not looking that bad. I like Netflix. I don't hate Netflix. I'm not sure I'd be a buyer right now, but I like the low volatility coming into the report, and I like the ascending pattern that we're at here. So and we're above the 50-day and the 200-day moving average. We're actually above the the 200-day and just about to cross the 50-day. The 50-day is still making its way up. So I think it would be better to wait for the blue line to be above the mustard, this ugly mustard colored line, which I need to change this color because it's atrocious. The things that we think about in the morning, right? Anyhow, so I'm not exactly, I'm not totally pleased with what I'm seeing. I'd like to see the momentum levels a little higher, but it's not looking bad. It's not looking bad. Now, the next stock that's reporting today, and I'm only going to hit the two big ones, is IBM. Now, let me give you the deal with IBM. IBM, and it's not looking as good. It looks a little more choppy. It looks like it's just coming up. But again, the 200 days above. Looks like we're in twilight zone here because the 200 days above the 50-day line. Not exactly pleased with IBM. And if you look at the long-term trend, it hasn't been doing all that great. It's been kind of choppy. See, if you look at Netflix over a long-term time period, look at this thing. It looks like it's starting to come up a little bit. But if you look at IBM, it's still trending right around the averages. So I'm not really seeing anything great there. But let's look at the numbers. The EPS is expected to be $4.69. A lot bigger than Netflix, right? Well, it's a blue chip company. IBM is IBM. 52 cents per share versus $4.69 per share. Revenue is expected to be $21 billion. A little over $21 billion, and that would be a decline of 4%. So Netflix, we're expecting like 30% more revenue. IBM, we're expecting 4% less revenue. IBM, we're expecting EPS, earnings per share, over a year ago from $4.69 a share, and on revenue, $21 billion. Again, Netflix, 52 cents per share, revenue, $5.45 billion, up 30%. And again, the expectations on Netflix is to beat revenue 75% of the times based on these expectations, and the EPS 75% of the time, and earnings 50% of the time. If you guys are lost on these numbers, just rewatch this video. Now, I want to talk about something really cool. Before I do, here's something else. Percentage of stocks, I promised to show you this. Momentum levels, this is weekly. Highest level. We are now not in one of the highest levels. We are now at the highest level on momentum, long-term momentum, in the last 5 years. So the market is grossly overbought. Not in the long term, but in the short term, it's grossly overbought. As a matter of fact, it's the most overbought today that it's been in the last 5 years. Large caps, which is why I'm not focusing on large caps right now. Let me show you something really cool now. This stock, check this out. This is Purple Innovations. You might have heard of this stock. Again, I'm sorry, I'm looking at two screens here. Sometimes at three screens, so my eyes are all over the place. But this is a cool company. This company offers mattresses direct to consumers via an online retailer. And now, kind of like Casper. You guys know Casper mattress? This is kind of like Casper mattress. And people are loving this mattress. It's now being available in retail stores. So it's moving its way. The analyst projected EPS is the earnings per share. Get this. It's expected to increase 270%. So you know how we were just looking at EPS for IBM and Apple and Netflix, and how earnings were expected to move up 30% or down 4%? EPS is expected to move up 270% between 2019 and 2020. Now, the stock is up about 140% since April of 2019. That's, let's see, May, June, July, August, September, October, November, December. We're talking 8 months. The stock made 140% gains on the underlying asset. On the underlying asset. Not the option, underlying asset. And as you could see here, the reason I love it, remember what I told you about small caps a few weeks ago when China and US decided to play nice with each other? I told you the trade war, that small caps are starting to price in things ahead of time and anticipate the end. So while large caps are doing this, making the highest overbought levels in the 200-day moving average, small caps have been breaking out. Because they've been congesting, they've been hibernating for 9 months. Look at this. They've been just sitting, waiting, and now they're hibernating. Now, This is the type of stock, this Purple Innovations, this is the type of stock that the Cyborg trades each and every week. If your goal is to multiply your account, not earn 21% extra revenue or see the stock go up 4% because it's beating from a year ago like IBM that hasn't grown in 20 years. I mean, this IBM is going to give you guys IBS. So again, this is the kind of stocks you guys want to focus right now. And this is the kind of stocks that I give you guys in my Cyborg systems. Stocks that have a potential to make 100, 200% more over a year, maybe less. Can you imagine how much the price of this stock rises if the EPS, if the numbers rise 270% over the numbers from a year ago? We're talking about doubling, tripling in price. Now, this is the type of stock the Cyborg trades. Now, if your goal is to multiply your account, do not look any further. I'm going to give you 4 trades today. Every week you get 4 trades like this every Monday. And if they're good, we keep them. If they're bad, we cut them. No options, small cap stocks, no games, nothing. Follow the link below. We're updating this today. These are the stocks that move quickly. You want to get in on these stocks now. 2020 is going to be the opportunity for small caps like this. I've been telling you guys this for the last 3 weeks. Large caps, most overbought levels in the last 5 years. Look, 5 years. Purple Innovations, breaking out. So if you want to get in on the best stocks that have the best opportunity for the largest gains in the quickest amount of time, you get 4 every week. You don't have to mess around with options, no strike price, no expiration dates. If they don't go your way, you just cut them. You don't lose any premium, you don't lose any value. And again, we're looking at stocks that have the potential to double their size over the next few months. Follow the link below. Learn about the Cyborg. Check out the stock. Check out the Purple Innovations. Don't be trading stocks. I don't want you to trade stocks that move like tanks. I want you to trade stocks that move like jet fighters, all right? Take a look at this thing. From $8 to $12 since December 16th. Folks, 50% gain in less than a month. That's what I'm talking about. Follow the link below. Check out Cyborg. You get 4 stocks every week. No monkey business. Follow the link below. New trades are coming out today. Talk soon.